There's a moment every trader knows, that heartbeat before the chart moves, the silence before the storm. Your mind is calm, your plan is clear, and yet in the space between thought and action, something happens. A flicker of doubt, a rush of urgency, the whisper that says if you don't click now, you'll miss it. That's the voice of FOMO. And on CPI day, it's louder than ever. This is not a tutorial. This is not financial advice. This is a story, a real one, about how I lost to that voice and how I learned to build a system strong enough to silence it. Because trading isn't just about the markets. It's about mastering the mind that meets them. So take a breath, slow down, and come with me into case number 2 FOMO on CPI day, rule-based entries. I remember that morning clearly. The chart was quiet, but my mind wasn't. It was CPI day, one of those days every trader marks on the calendar, pretending they'll stay calm when the numbers drop, but secretly waiting for the chaos. I woke before sunrise. The room was still dark, the glow of my monitors the only light. Coffee beside me, charts everywhere. My plan already written the night before, wait, observe. Let the first reaction settle and only act if my setup appears. Simple, logical, controlled. But markets have a way of testing promises, especially the promises you make to yourself. As the release time approached, my heart began to sync with the ticking clock, each second louder than the last. 10 minutes to go, then 5. I felt it, that subtle tightening in the chest, the anticipation, the whisper that says, this is your chance. The candle before the release was small, almost meaningless, but to me it looked like the calm before a storm I had already imagined. I told myself I would wait. I even said it out loud, no entry until confirmation. Then the numbers hit. The chart exploded. A single candle shot up, slicing through resistance like it wasn't even there. And in that instant, my logic vanished. All I could think was, I'm missing it. The move I predicted, the setup I studied, the opportunity I wanted to be proud of, gone while I sat frozen staring. So I clicked, not because my system told me to, but because my ego couldn't stand the thought of being left behind. That's the silent voice of FOMO. It doesn't yell, it whispers. It disguises itself as urgency, as opportunity, as destiny. It convinces you that discipline is hesitation, that waiting is weakness. Within seconds, price snapped back. The candle that once looked like victory became a trap, and I realized I hadn't entered the market. I had entered a story, one written by fear. It's strange how quickly confidence turns to chaos, how one impulsive decision can erase hours of preparation. As the price reversed, I felt the heat rise to my face. I knew this wasn't about money. It was about control, or the lack of it. I closed the trade for a small loss, but the damage wasn't in the numbers. It was in the silence afterward. The silence where you start asking yourself, why did I do that? I stared at the screen. The same pattern I had traded hundreds of times suddenly looked unfamiliar. It wasn't the chart that changed, it was me. That's the cruel paradox of trading psychology. You can know everything about the market, yet still lose to your own reflection. For a moment, I wanted to blame the volatility, the news, the algorithms. But deep down, I knew the truth. FOMO didn't start when the candle moved. It started hours before, when I began imagining what it would feel like to win. The human brain is addicted to anticipation. We crave the dopamine of almost. And trading is a perfect machine for feeding that craving. I realized then my mistake wasn't clicking the button. It was needing to. Because when you need to trade, you're no longer following a plan, you're chasing a feeling. I leaned back and closed my eyes. The charts blurred into nothing. I tried to remember the rules I had built for days like this, rules meant to protect me from myself. Wait for the first impulse to fade. Confirm with structure. Only act when risk is defined. 3 simple lines. But on CPI day, simplicity is the first casualty. I opened my trading journal. I wrote the words FOMO on CPI impulse entry violated rule number 1. It hurt to write it, but it was necessary because writing forces honesty, and honesty is the beginning of recovery. The more I thought, the more I realized FOMO isn't just fear of missing out, it's fear of being insignificant. When you see others catching moves, posting profits, feeling powerful, your brain screams you should be there too. It's not greed, it's insecurity wearing a mask of ambition. I sat in silence for a long time, tracing back the moment when the feeling took over. It wasn't when the candle exploded. It was earlier when I started comparing. Comparison creates urgency. Urgency destroys patience. And patience is the foundation of every profitable system. As I replayed the chart, I saw something I hadn't noticed before. My actual rule-based entry would have triggered 20 minutes later. Same direction, same bias, but this time with structure confirmation and controlled risk. If I had waited, the trade would have been clean, precise, professional. Instead, I let emotion drive the wheel. That realization didn't make me angry. It made me curious. Why did I need to prove something to the market that wasn't even aware of my existence? The market doesn't care. It never has. It's only me who cares about being right, about being early, about being validated. And that's the truth most traders never face. We don't chase trades. We chase identity. We want to feel competent, capable, in control. But the act of chasing takes all of that away. So that day, I made a decision. If I couldn't eliminate emotion, I would design rules to contain it. Because rules aren't restrictions. They are freedom in disguise. A rule says you don't have to decide right now. It gives your rational mind a chance to catch up before your emotions take the shot. That night, I rebuilt my plan. Not just the technicals, but the psychological checkpoints. Every condition I needed before touching the keyboard, every reminder that no trade is better than a forced trade. And as I wrote, I felt something shift. It wasn't pride, it was peace. Peace, because I realized that discipline is not natural, it's trained. No one wakes up calm on CPI day. You become calm by creating a system strong enough to hold you when your instincts fail. That was the beginning of my transformation. The next morning, I opened my platform again. Same desk, same screens, but something felt different. The noise in my head had quieted as if the storm had passed and only the ocean remained. But I knew it was temporary. Peace in trading is not permanent, it's maintained. I watched the charts move with less urgency. I wasn't looking for a setup. I was looking for myself, the version of me that could sit through movement without reacting. And as minutes passed, I realized how rare that state is. Most traders think they are looking for the right pattern. In truth, they are looking for relief from uncertainty. When you've been through a day like CPI, you realize that uncertainty is not the enemy. Your need to escape it is. That's what FOMO is, the inability to sit with not knowing. The need to turn potential into certainty instantly. I remember my hand hovering over the mouse that day, my brain screaming, "You're missing it." But missing isn't a loss. Acting out of fear is. That's the difference between professional and emotional trading. Professionals don't act to feel better. They act when their plan demands it. As I watched price move again, I noticed how my body reacted before my mind did. A twitch in my fingers, a rush in my chest. It was subtle, but it was there, that primitive survival mechanism triggering as if danger was near. Our brains are not designed for markets. They evolve for survival, not speculation. In the wild, acting fast kept you alive. In trading, acting fast kills your edge. I used to think I needed more knowledge, better indicators, sharper analysis, more data. But what I really needed was awareness. Not awareness of the market, awareness of me inside the market. I began writing every physical cue I noticed. Tension in my shoulders when a candle spiked, shallow breathing, when price paused near my entry. That micro hesitation before clicking buy, each one was a symptom of emotional activation. And if I could identify it, I could manage it. Because awareness precedes control. You can't manage what you can't see. Later that week, I replayed my CPI trade, not to punish myself, but to understand it. I slowed the recording to half speed, watching each moment, listening to my own thoughts as I journaled them. It's running. Should I chase weight? No confirmation yet. But look at that volume. Everyone's getting in. Click. There it was, the moment emotion won. It wasn't the candle. It was the thought, everyone's getting in. That single line betrayed my mindset. I wasn't trading my edge. I was trading my comparison. That's when I wrote a new rule in bold: never compare your chart to another trader's success. It sounds simple, almost obvious, but it's not. Because comparison is invisible until it controls you. When you scroll through social media or chat in trading groups or watch someone post their profit in real time, you absorb the illusion of momentum. Your brain says they're ahead, you're behind. And suddenly every candle becomes a race. But there is no race. There's only your chart, your rules, your timing. The more I wrote, the more I saw how my biggest losses didn't come from bad analysis, they came from broken patience. The market punished my need for excitement. And that's when I made a realization that changed how I see everything. The opposite of FOMO is not indifference. It's trust. Trust in your process. Trust in your system. Trust that missing a move today doesn't mean missing success forever. That trust has to be built, not believed. It's not a feeling, it's a record of evidence you create by following through on your rules over and over again. So I went back to my charts and designed something new, my rule-based entry system. It wasn't fancy, just a series of checkpoints before any order could be placed. 1 point context. Is the setup aligned with the higher time frame structure? 2 point confirmation. Has the impulsive move stabilized? 3 condition. Are the liquidity zones clear and risk measurable? 4 clarity. Can I explain this trade in one sentence without emotion? If any answer was no, the trade was disqualified. It was mechanical, rigid, boring. Exactly what my emotions hated. And that's why it worked. Because rules exist to protect you from the version of yourself that shows up under pressure. At first, following them felt unnatural. My instincts fought back. There were times I stared at the screen rule checklist in front of me and still felt that old itch. What if this one's different? But every time I waited, every time I let a trade go without regret, I felt stronger. It's a paradox. Every moment of restraint increases confidence, not reduces it. In trading, confidence isn't built by winning. It's built by staying aligned. Winning is random. Alignment is earned. Weeks later, another CPI report came out. Same setup, same volatility, but this time I was prepared. The first candle spiked just like before. I felt the adrenaline, the surge of potential. But then I heard my inner voice calm, deliberate. No confirmation yet. Wait. I waited. The second candle retraced. Then structure formed, clear, clean, logical. And when my checklist lit up green, I entered. It wasn't excitement, it was precision. The trade played out beautifully. Not because I predicted CPI, but because I respected uncertainty. That's when it hit me. Rule-based entries aren't about perfection. They're about protection. They protect your capital, yes. But more importantly, they protect your mind from the noise that lives inside it. When you follow rules you've designed from clarity, you're not trading the market anymore. You're trading your plan. And that plan becomes your anchor in chaos. After that day, I stopped seeing news events as threats. They became mirrors, opportunities to observe my psychology under pressure. CPI days, FOMC days, NFP releases. They're not about the numbers. They're about the narratives we build around them. Every trader has one. This time it'll be different. This move will change everything. This is my moment. But markets don't care about moments. They only care about math. And math only rewards consistency. So now when I trade, I ask myself one question before anything else. Am I trading to prove something, or am I trading to execute something? If the answer is the first, I close the chart. If it's the second, I begin my checklist. That small distinction between proof and process became my filter for every decision. And the more I used it, the more I realized how many of my trades were subconscious attempts to prove something that I was skilled, that I was right, that I could recover. But the market doesn't need proof. It only responds to preparation. That's the day I stopped trying to be a prophet and started being a professional. The more I traded with structure, the more I began to see something profound. The rules were never really about the entries. They were about redefining my relationship with the uncertainty. When you start trading, you think control means predicting what's next. But control isn't prediction. Control is preparation. It's the quiet confidence that whatever happens, you already know how you'll respond. I used to chase certainty. Now I chase consistency. And in that shift, the noise in my mind started to fade. But it didn't disappear completely. Because even as discipline grows, the human need for validation doesn't die, it hides. It waits for weak moments. It whispers in the background, maybe this one time you can bend the rule. It happened again one morning, not on CPI day, just a normal session. The market was calm, too calm, and that calm felt uncomfortable. I caught myself wishing for movement, for something to react to. That's when I realized I was addicted to stimulation, not profit. Trading wasn't about money anymore. It was about feeling alive. And that's dangerous, because the market is a terrible place to look for feelings. So I forced myself to sit through boredom. No entries, no analysis, just observation. At first it was torture. My mind screamed for action. But slowly something shifted. I began to see patterns in stillness, not in price, but in me. Every time boredom appeared, I saw the truth. My brain equated silence with failure. If I wasn't trading, I wasn't progressing. But in reality, restraint was progress. It's strange how the brain resists what helps it most. You can teach yourself to read charts, but teaching yourself to be patient, that's the real mastery. One day during a quiet session, I noticed how still I felt. No anxiety, no rush, just presence. It was then I realized what rule-based discipline truly does. It gives you peace before the outcome. I used to think peace was the reward for winning, but peace is the precondition for winning. When you are calm, you see clearly. When you are attached, everything blurs. That night I reviewed my journal again. I wasn't grading my results anymore. I was grading my state of mind. Did I follow my checklist? Did I act with intention? Did I stay patient under uncertainty? If the answer was yes, that was success, even if the trade lost. Because consistency of mind precedes consistency of outcome. I started to notice something else too. My language changed. Before I used to say things like the market made me lose. Now I said I violated my rule. The market hadn't changed. I had. Accountability replaced emotion, and accountability brings freedom. I began to see trading less as a battle and more as a mirror. Every candle, every hesitation, every surge of excitement, it all reflected something inside me. Fear, impatience, ego. The market doesn't punish these emotions. It simply exposes them. And exposure is uncomfortable, but it's also sacred, because without it, you never evolve. The deeper I went into this journey, the more I understood FOMO isn't just a trading problem. It's a life problem. It's the mind's refusal to trust timing, the belief that if we're not acting, we're falling behind. But life, like the market, unfolds in waves. You can't catch them all. You just need to ride the ones that align with your rhythm. That's what rule-based entries really are, alignment with rhythm. They're not about control, They're about synchronization. When my checklist became second nature, trading started to feel like meditation. Each step grounded me. Context, confirmation, condition, clarity. It was like breathing in, out deliberate. Sometimes I would stare at a setup that looked perfect on the surface. Momentum strong, structure clean. But deep down I'd feel something off, a tiny discomfort, a resistance in the gut. I learned to trust that feeling because the body knows before the mind does when emotion is in control. Rule-based systems aren't just analytical, they're emotional filters. They give you space to feel without acting. And the more I respected that space, the more the market began to slow down for me. Not literally price moved as fast as ever, but internally everything felt slower. It's what I call psychological time dilation. Moments stretch because you're finally present in them. On another CPI day months later, I put this to the test. The data release came. Volatility hit like a wave. But inside I was calm. I remember watching that first spike. I didn't flinch. My breathing stayed steady. My mouse stayed still. The plan was the same as always: wait for stabilization, confirm structure, then act. The chart danced, tempting me with every flicker of movement. But temptation is just a test of memory, a test of whether you remember who you said you'd be when things got hard. And I remembered. I waited. The first reaction faded. The second candle built structure. The pattern formed. I entered according to plan. The trade played out perfectly. But the profit wasn't the reward, the calm was. For the first time, I felt what true control means in trading. Not control over the market, control over me. That moment taught me something I wish every trader could feel: the peace that comes from surrender. Because surrender isn't giving up. It's giving in to your system, your process, your rules. It's trusting that the work you've done in preparation is enough. That's when I started calling my strategy not a trading system, but a psychological scaffold. It's what holds me steady when volatility shakes the ground. Every trader needs one, not because it guarantees profit, but because it guarantees clarity. Without it, you're not trading the market. You're trading your emotions, and emotions have infinite drawdown. When I share this story now, it's not to claim mastery. It's to show that mastery isn't an endpoint. It's a practice. Every CPI day, every quiet day, every loss and every restraint, they're all reminders that the work never stops. FOMO will never disappear completely. It's wired into us, but with awareness, it loses power. Awareness creates space, and space is where discipline breathes. Trading is not about fighting your emotions. It's about befriending them, understanding them, designing systems that let them exist without controlling you. That's what I mean when I say rule-based entries. They are emotional architecture, the blueprint that allows freedom within structure. And once you build that, everything changes. Months passed, different trades, different setups, different outcomes, but every day began with the same ritual: coffee charts, checklist, breath. It wasn't exciting anymore, and that was the point. In the beginning, I chased the thrill, that rush of being in the game. Now I chase stillness, because stillness was where decisions became clean. The more I embraced this rhythm, the more I understood that trading wasn't just something I did. It was a mirror reflecting the kind of person I was becoming. Every impulsive click showed me where I lacked patience. Every disciplined pass showed me where I had grown. The market wasn't my opponent. It was my teacher. And the lesson, repeated again and again, was simple. Mastery begins when you stop fighting your own mind. I used to think success in trading was about accuracy, predicting where price would go. But accuracy is fragile. It depends on conditions you can't control. What endures is alignment, the ability to act in harmony with your plan, regardless of what the market does. Some people call that discipline. I call it integrity, because discipline is what you do when someone's watching. Integrity is what you do when no one is. When you trade alone, no audience, no validation. The only person who sees your integrity is you. And that's why trading is so powerful. It forces you to meet yourself unfiltered. Every hesitation, every impulse, every rationalization, it's all exposed in real time. The chart doesn't lie. It's a mirror of your nervous system. There was a time when I thought the market punished me. Now I see that it only ever reflected me, my fears, my greed, my impatience, my desire to be right. And when I started focusing on changing me instead of changing the market, everything softened. The swings didn't feel violent anymore. Losses didn't feel personal. Wins didn't feel addictive. I began to experience what I can only describe as neutrality, a state where results didn't shake my emotional core. That neutrality is not numbness, it's clarity. It's the ability to feel everything but be moved by nothing unnecessary. One day after another CPI release, I realized how far I'd come. The data hit. The chart exploded. The same chaos, the same volatility. But this time, I didn't flinch. I watched, waited, breathed. I followed my process, executed my rule-based entry-managed risk. The trade hit target and closed. Then I walked away. Not to celebrate, not to check the profit, but to write in my journal. I wrote same event, same volatility, different trader. That sentence stayed with me because that's the essence of growth. The world repeats its tests until you pass them. The market repeats its patterns until you internalize the lesson. And that lesson for me was this: FOMO doesn't disappear when you win. It disappears when you no longer need to prove anything. When trading stops being about ego and starts being about execution, the entire experience transforms. You realize the true victory isn't in catching the move. It's in staying true to your rules, while everything inside you screams to break them. There's a quiet power in that, the power of choosing alignment over impulse. Now, when I mentor younger traders, I tell them this: your biggest edge isn't your strategy. It's your state of mind. Your strategy tells you what to do. Your psychology determines if you'll actually do it. If you don't master the latter, the former doesn't matter. And mastering psychology isn't about removing emotion. It's about training awareness so your emotions no longer make the decisions for you. The market doesn't care how you feel, but your feelings care deeply about how you trade. That's why rule-based systems exist, not to control the market, but to contain your impulses long enough for wisdom to intervene. When people ask me what changed my trading career, I don't say CPI day or a new indicator. I say clarity. Clarity to see myself without judgment. Clarity to separate thought from truth. Clarity to act with reason when emotion begs for control. And that clarity came from pain, the pain of watching myself break my own rules, the pain of realizing that no amount of knowledge can replace self-awareness. But that's the beauty of it. Every mistake becomes a teacher when you listen long enough. Every loss becomes tuition for emotional intelligence. Today I trade less but earn more. Not because the market changed, but because my relationship with it did. I don't need excitement from trading anymore. I get fulfillment from consistency. Sometimes I still feel the pull of FOMO, that subtle spark when price moves fast. But now, instead of reacting, I smile, because I know it's just the echo of an old version of me trying to resurface. And I remind myself gently, you don't need to chase what's already yours. Control calm clarity. The market rewards the trader who waits. It punishes the one who wants. Wanting is noise. Waiting is power. So I wait. I follow my process. I trade my plan. Because I've learned that consistency isn't built in the moment of action. It's built in the 1,000 moments of restraint that come before it. When I close my charts each day, I no longer measure success by profit or loss. I measure it by one simple question: did I stay true to myself today? If the answer is yes, that's victory. Because at the end of every trade, every day, every CPI release, that's all that remains: you, your process, and your peace. And when you have peace, the market finally stops feeling like a battlefield. It becomes what it always was, a mirror reflecting your own state of mind. That's what I learned on CPI day. That's what FOMO taught me. And that's why I'll never trade without rules again. Because rules don't limit freedom, they create it. And within that freedom, the freedom to act with clarity, to stay calm under chaos, to be unmoved by fear, I finally found what I had been chasing all along: not profit, not certainty, but peace. If there's one thing I've learned, it's this: the market will always test your discipline. It will tempt you, provoke you, and reveal the parts of yourself you try hardest to hide. But every chart, every loss, every impulsive click, they all carry the same message: control is not found in prediction. It's found in patience. When you learn to act only when your plan allows it, you stop being at the mercy of volatility. You become the calm within it. That's what trading really is. Not a chase for profit, but a practice of presence. So the next time FOMO whispers your name, remember, you don't need to chase every move. You just need to master your own. This was Case Entre 2 FOMO on CPI Day, rule-based entries. I'm glad you listened, because the more you understand your mind, the less power the market has over it. Stay patient, stay aware, and as always, trade your plan, not your emotions.